All right. Welcome back, everyone, for part 2 of our deep dive into trading.
Yeah, excited to be back.
If you're just tuning in, we started last time talking about some high-level trading philosophy, the big picture.
Exactly.
And this time we're going to get down to the nitty-gritty and talk about a specific approach that I like to use. I call it the hunter method.
Okay.
And it's all about, patience and discipline and waiting for that right moment to kind of strike like a hunter would, right?
Yeah.
So to get started, maybe you can tell us a little bit about why you decided to focus on solely the Eurodollar for this method.
Well, it might seem kind of counterintuitive at first to narrow your focus down to just one currency pair.
Right.
But I found in my experience that just picking one instrument and really getting to know it really, really well really gives you an advantage. So focusing on the Eurodollar specifically, which is the EUR/USD, allows you to, it's almost like getting to know the personality of a friend.
Right.
You'll start to pick up on the little subtle cues and the little quirks that someone just glancing at it wouldn't. And that deep knowledge becomes your edge.
I see.
Yeah.
Yeah, so it's almost like becoming a specialist instead of trying to be a jack of all trades.
Right. Exactly. Yeah.
Yeah. But why the Eurodollar specifically?
Well, the Eurodollar is one of the most actively traded currency pairs globally.
Okay.
Which means there's a lot of liquidity, and it tends to have these really nice, clear, well-defined trends that make it easier to kind of identify potential setups.
Makes sense.
Yeah.
So we've got our targets, the Eurodollar, but even the best hunter needs to know when to strike, right? So is there a specific time window that this method focuses on? Yeah,
so the hunter method really hones in on the London trading session.
Okay.
Specifically between the hours of 2 a.m. and 5 a.m. New York time.
2 to 5 a.m. Wow, that's early.
Yeah.
I guess the early bird gets the worm, or in this case, the pip, huh?
That's right.
But why the London session?
So the London session is when the European markets are in full swing.
Okay.
And it overlaps with the early hours of the U.S. trading day. And so you get this kind of perfect storm of activity and volatility.
Right.
Which means there's a lot more potential for these price swings.
Yeah.
And ultimately, a lot more chances to make a profitable trade.
Makes sense. You're starting to see why you call it the kill zone, right?
Yeah.
But I'm curious, what about those times when the market is kind of quiet, even during the London session?
Yeah, that's a great question. And those quiet periods are a fact of life in trading, you know? And they can be especially frustrating for those new to the game.
Right.
Because you feel like you should be doing something, but the key is to really resist that urge to jump into a trade just for the sake of taking action. So the way that I like to navigate those quiet periods is to use a very specific trigger.
Okay.
And that is, I'll wait for the Eurodollar to break out from the previous day's trading range.
Okay.
So think of it like...
So it's almost like the market is drawing a line in the sand.
Exactly.
And saying, hey, if you want to play, you got to cross this line.
That's right.
And then we'll start paying attention.
That's exactly right, yeah.
So letting the market dictate the action. Not trying to force a trade where there isn't one.
Exactly.
I like that.
Yeah.
So what tools do you use to kind of get a sense of, what the market might do?
Sure. So one tool that I use quite a bit to kind of get a sense of what the market might do is a website called Forex Factory.
Okay.
Have you heard of that?
I've heard of Forex Factory, yeah.
Okay, cool.
Is it really important to stay on top of the news when you're trading like that?
I think it's incredibly valuable, yeah. Let me ask you this. Imagine you're trying to hunt in a really dense forest.
Right.
And you didn't know that a storm was about to roll in.
Okay.
You could get caught off guard pretty easily.
Yeah, definitely.
Right. And so Forex Factory is kind of like our way of checking the weather forecast for the financial markets.
Okay.
It gives us a heads up on what might shake things up.
Right. So you can kind of prepare for the potential volatility. And,
exactly.
Yeah.
Okay. Yeah.
I like that analogy. I never really thought about it like that before.
Yeah.
So Forex Factory helps us anticipate the potential volatility.
Yeah.
But even with all that preparation,
right,
there are going to be times when trades don't work out.
Oh, absolutely.
Right. So how do you handle the inevitable losses?
Yeah, that's a great question. And that's where the mental game of trading comes in.
Right.
And I'd say that this is arguably the most important skill you can develop as a trader.
Okay.
Because here's the hard truth.
Right.
every trader, no matter how experienced, no matter how skilled, is going to face losses. It's just part of the game.
It's part of the game.
Yeah. And the key is not to let it derail you emotionally.
Right. Yeah, because I can see how getting caught up in those losses can lead to some bad decisions.
Absolutely, yeah.
Yeah. So how do you kind of that mindset?
A lot of new traders get caught up in the idea of trying to achieve a perfect win rate.
Okay.
They think they need to win every single trade.
Right.
And that's a recipe for disaster.
Yeah.
It sets you up for disappointment, and it leads to emotional decision-making.
I see.
Even if you have a strategy that gives you an edge,
you're
still going to have losing trades.
Okay.
It's like flipping a coin. Even if it's a weighted coin that lands on heads 60% of the time, it's still going to land on tails sometimes.
Right.
And you just can't predict that exact sequence of outcomes.
Yeah, that coin toss analogy I think is really helpful.
Yeah.
You can have an edge, but you can't control
that
random nature of the market. So
that's right.
The sooner you can shift your mindset from chasing wins to managing risk, the better.
Right. That's exactly right.
Okay, so we've got to accept losses as part of the game, but how do you deal with those in the moment?
Sure. So one of the core principles of the Hunter method is this.
Okay.
If you hit your stop loss for the day, you close your trading platform.
Wow.
And you walk away. No exceptions.
Okay, so that's pretty strict.
It is strict, but it's important because
it's just about preventing those.
Exactly. You got to cut those emotions off at the source.
Yeah.
Because trading, when you're feeling frustrated or you're feeling desperate, almost always leads to more losses.
Right.
It's like trying to drive with a blindfold on.
Yeah.
You're not going to get very far.
I see what you mean. So it's as much about protecting yourself as it is about managing your capital.
Exactly.
Yeah. Okay.
Yeah.
And what about when you're on a winning streak?
Yeah. Great question.
Is there a similar rule?
Absolutely. Just you shouldn't chase losses.
Right.
You shouldn't chase wins either.
Okay.
If you hit your profit target for the day, walk away.
Okay.
Don't risk giving back your gains.
Got it.
By getting greedy or overconfident.
So staying disciplined, sticking to the plan.
Exactly.
No matter what. That makes a lot of sense.
Yeah.
Okay. So we've talked about managing those emotions in the moment.
Right.
But how do you manage your training environment, like your actual setup?
That's a really good point, and I think that's a really important aspect of trading psychology that people often overlook.
Okay.
One of the things that I highly recommend, especially for beginners, is to avoid the temptation of mobile trading.
Oh, really?
Yeah. I think having that constant access to the market on your phone can be really detrimental.
I see.
When you're constantly checking charts and prices on your phone, you're more likely to overtrade. Okay.
You're more likely to second-guess your decisions, and you're more likely to react emotionally to every little price fluctuation.
So you're saying create a healthy separation between trading and the rest of your life.
Exactly. Create a dedicated space, ideally on a computer, where you can really focus on your analysis and execution.
So no more checking charts in line at the grocery store.
I wouldn't recommend it.
Okay.
Trading is a skill that requires focus and discipline on a clear head.
Yeah.
And you wouldn't try to perform surgery while you were texting your friends, would you?
No, definitely not.
You got to treat trading with that same level of respect and attention.
Gotcha.
Yeah.
I'm definitely guilty of checking those charts in some random places.
I think we all are.
Yeah. Yeah. All right. Well, anything else you want our listeners to kind of internalize from this part of our deep dive?
Yeah, I think we've covered a lot of ground here.
We have, we talked about focusing on the euro dollar, targeting the London kill zone, using Forex Factory to kind of get a sense of the market sentiment.
Okay.
And maybe most importantly, we talked about mastering those emotions. Right. But before we move on to the next stage where we're actually going to start placing trades, I want to give everyone a little homework assignment.
Oh, homework? All right. I knew a pop quiz was coming.
No quiz, I promise.
All right.
But I want you to install a trading indicator called Market Sessions.
Okay.
I think it was created by 𝐔𝐬𝐬𝐧𝐠.
market sessions?
Yeah, and I want you to just track
Okay.
price movement of the euro-dollar during the London kill zone.
Good.
And just observe how many pips the currency typically moves up or down each day, and just really study that range of movement.
Okay.
Right.
So getting a feel for that heartbeat of the market.
Exactly, yeah.
Okay.
And once you start to understand that typical range, you can set more realistic expectations. And you can avoid getting caught off guard by those wild swings that happen sometimes.
Right.
Trust me, this will pay dividends in the long run.
Okay. Sounds good.
Yeah.
I'm going to install that indicator and start taking some notes.
Awesome.
Anything else we should keep in mind while we're doing this homework?
Yeah, just remember to approach it with a curious mindset.
Okay.
Don't just blindly watch the numbers.
Right.
Ask yourself questions.
Right.
Like, what days were especially volatile? Were there any news events on Forex Factory that correlated with those big moves?
Okay.
The more you actively engage with the market,
right,
the faster you'll develop your trading intuition.
Okay, that's a good point.
Yeah.
All right, well, that was a lot of great information.
Absolutely.
But anything you want to leave our listeners to ponder?
Sure. Here's a question I want you to think about.
Okay.
How could understanding the typical pip range of the London kill zone impact your risk management strategy? Think about that, and we'll pick it up right here next time.
All right. Sounds good.
We've got a deep dive into Forex Factory.
Can't wait. See you then. Welcome back, everyone.
Yeah.
Hope you all had a chance to play around with that market sessions indicator we talked about. I know I did. And I have to say, just seeing the eurodollar's typical moves laid out visually really changed my perspective.
It's pretty powerful, isn't it?
It is, when you actually see it.
Yeah, it's one thing to know, like, intellectually that markets fluctuate, but to actually see the range.
Yeah, you really get a sense of...
Yeah, during specific sessions.
Both the potential and the need for that risk management plan.
Right, absolutely. I was noticing some days the eurodollar moved close to 50 pips during the London kill zone.
Right.
Other days, it was barely 20. So if we're not just randomly trading those fluctuations, how do we figure out whether to expect fireworks or a quiet day?
You mentioned Forex Factory before. Is that where it comes in?
That's exactly where it comes in, yeah.
Okay.
Forex Factory is our go-to tool for kind of getting a sense of the overall market mood. It's essentially a calendar of economic news releases and events that can impact the currency markets.
So it's kind of like our heads up on what might move the eurodollar.
That's a great way to put it, yeah.
Okay. But there's so much information on Forex Factory.
Yeah.
How do you even begin to sift through all that?
That's where the color-coded folders come in handy.
Oh, okay.
So Forex Factory uses yellow, orange, and red folders to indicate the potential impact of a news release.
Okay.
Yellow is low impact, orange is medium, and red signals high impact.
Okay, so if we're looking for those volatile breakouts,
exactly,
we want to be watching those red folders closely.
Those are the ones that are most likely to inject some serious action into the London kill zone.
Right.
And create the kind of trading opportunities that we're looking for.
And that brings us back to our discussion about patience.
Exactly.
Right. If there aren't any major news events on the horizon, maybe best to just wait it out.
That's right. We're not just firing off trades randomly.
Right.
We're hunters. We're patiently waiting for the right conditions to line up.
Okay, so we've got Forex Factory to give us a sense of the market mood, patience, to keep us from jumping the gun.
Right.
But assuming all the stars align, we've got a potentially volatile day based on Forex Factory.
Yeah, okay.
We're watching the London kill zone. What are we actually looking for on the charts to signal a potential trade entry?
This is where our focus on breakouts really comes into play.
Okay, breakouts. Remind me again what those are.
So a breakout is essentially when the price of an asset, in our case, the eurodollar, moves decisively beyond a previously established range.
Okay.
You can think of it like the market breaking free from its cage.
Okay, so in the case of the Hunter method, we're looking for the eurodollar to break out of the previous day's trading range, right?
That's exactly right, yeah.
Okay, and that gives us that previous day's range gives us that.
Yeah, it gives us a clear level to watch.
Clear level, yeah, our reference point.
A reference point.
If the eurodollar breaks above the previous day's high, it could signal that momentum is shifting to the upside.
That's right.
And if it breaks below the previous day's low,
then we're looking at a potential move to the downside.
Got it.
Yeah.
Okay, I'm starting to see how the pieces fit together here.
Yeah.
So we've got the eurodollar, London kill zone, Forex Factory for that mood check.
Yeah.
And then breakouts.
Breakouts for entry signals.
For those entry signals.
Exactly.
But there's more to it than just any breakout, right?
You're sharp. You're picking up on it quickly.
Well, I've been doing my homework.
There you go. Yeah, we don't just jump into any breakout we see.
Okay.
We need to make sure it's a legitimate move, not just a false breakout that quickly fizzles out.
Right, yeah.
So one thing that I always pay attention to is what happens immediately after the breakout.
Okay.
Does the price continue to move in the direction of the breakout?
Okay.
Or does it quickly reverse course?
So it's about confirming the breakout has legs.
Exactly.
Before we chase after it.
Yeah, you want to see that the price is truly moving in your desired direction.
Right.
Before you commit your capital.
Okay. So how do you tell the difference between a strong breakout and a weak one?
That's a great question.
Are there any visual cues on the chart that we should be looking for?
There are definitely some things you can look for.
Okay.
So first, you want to pay attention to the volume accompanying the breakout.
Okay.
You know, high volume suggests there's a lot of conviction behind the move.
Okay.
Like a crowd pushing forcefully through a door.
Got it.
Right. And then also you want to observe the speed of the breakout.
Right.
You know, a fast, impulsive move is more likely to be genuine than a slow, grinding one.
So a true breakout should have a sense of urgency to it.
Exactly.
Not like it's struggling.
Not second-guessing itself, yeah.
Right. Okay, so ideally, we're looking for that high volume, quick price surge. And it looks like it has that real momentum.
Yeah, and that's a really good starting point.
Okay.
But it's also important to remember that no two breakouts are exactly alike.
Right, yeah.
And you need to develop an eye for what a healthy breakout looks like.
Right.
In the context of the overall market conditions.
Okay, so Forex Factory, to get a sense of that market environment, we're watching for those breakouts from the previous day's range.
That's right.
And we're evaluating the strength of those breakouts based on the volume, the speed of the price move.
Exactly.
To get it all.
You nailed it. You're already starting to think like a hunter.
All right.
But before we get too far ahead of ourselves,
okay,
there's one more crucial element that we need to discuss.
Okay.
And that's how to actually enter the trade.
Okay, this is what I've been waiting for.
Yeah. All right, let's do it.
We've got our target, we've got our timing, our market mood check, our signal.
Yeah.
Now, how do we actually pull the trigger?
Well, that's where things get really interesting.
Okay.
And it's what we'll cover in detail in the next part of our deep dive.
Right, I'm on the edge of my seat.
Looking forward to it.
Can't wait. But anything you want to leave our listeners to think about?
Yeah, just remember.
Okay.
Trading is a skill that takes time and practice to develop.
Okay.
Don't get discouraged if you don't become a master breakout hunter overnight.
Right.
Focus on learning the process.
Okay.
Honing your observation skills. And developing the discipline to stick to your plan.
Words to live by. All right, so until next time.
Yeah, see you then.
Welcome back, everyone, traders.
All right.
So we've covered a lot of ground in our deep dive into the hunter method.
Yeah.
We've talked about everything from like market psychology to using Forex Factory to spot those volatile days to identifying those key breakout signals.
Yeah.
So now I'm ready to get to that secret sauce, the part where we actually execute those trades.
Okay, yeah, let's do it. Let's get down to brass tacks.
All right, so far we've been using that market sessions indicator to get a feel for how much the eurodollar typically moves during that London kill zone. And we've been keeping an eye on Forex Factory to anticipate any of those high-impact news that might create those volatile breakouts we're looking for.
Exactly. Those are those foundational elements. And now when we see that potential breakout forming, we don't just jump in right away.
Okay.
We need a plan. We need a specific entry strategy.
Okay, I'm all ears. So let's say we see the eurodollar breaking above the previous day's high during the London kill zone, and we're feeling bullish.
Okay.
How do we enter the trade?
So in the hunter method, we use a tool called a buy-stop order.
A buy-stop order, and why use that?
Yeah.
Instead of just like buying at the market price.
So buy-stop order is basically an instruction that you give to your broker to automatically buy the eurodollar.
Right.
Once the price hits a level that you set, that's above the current market price.
Okay.
So you're essentially saying, if the price continues to move up and hits this trigger point, enter the trade for me.
I see.
Right.
So instead of buying like right when the breakout happens.
Yeah, you're waiting for a little more confirmation.
Yeah, we're waiting to see if it has legs before we chase after it.
That's exactly right. You want to see that the price is truly moving in your desired direction before you commit your capital.
So where do we set that buy-stop order?
So typically we set our buy-stop order a few pips above the high of the breakout candle.
Okay.
So the candle that actually broke through the previous day's high,
Okay.
you're giving it a little breathing room.
Okay, so not right on top of that breakout point.
Exactly.
Give it some space.
A little bit of space to breathe.
Okay, and what about if we're bearish on the euro dollar and we see it breaking below that previous day's low?
Then we would use the opposite order, which would be a sell stop order.
Sell stop.
Okay.
Same concept.
Same concept.
Reverse.
Reversed, yeah. So we're letting the price action confirm our bias.
Exactly.
Before we enter.
That's right.
I like that. What happens if our buy stop or our sell stop doesn't get filled?
Yeah, that's a great question.
Does that mean we miss the trade?
Not necessarily.
Okay.
Remember, breakouts can be fast and furious.
Right.
And sometimes the price will, spike up or down really quickly.
Okay.
Trigger our order and then reverse.
Right.
Leaving us with a losing trade.
So even with this confirmation strategy, we're not immune to...
You're not immune to false breakouts or those sudden reversals.
Okay, so how do we protect ourselves?
Right.
If the market does move against us?
That is where our good friend, the stop loss order, comes in.
Stop loss order.
Super important, not just for managing those emotions.
Right. And avoiding those impulsive revenge trades.
Right.
But it's also crucial for protecting our capital.
Right, okay.
On every single trade.
Okay, so the stop loss order, it's an order that automatically closes our trade.
Yep.
If the price moves against us by a certain amount.
That's right.
Essentially limiting our potential losses.
Exactly.
But where do we actually place our stop loss?
Yeah, so there's lots of different approaches to this.
Okay.
But in the Hunter method, we like to keep things simple and consistent.
Okay.
So if we're entering with a buy stop order, we'll typically place our stop loss a few pips below the low of the breakout candle.
Okay.
So we're basically saying if the price reverses and breaks back down through that low, we're out of the trade.
We're out. Okay.
Yeah.
And for sell stops?
For sell stop orders, we place our stop loss a few pips above the high of the breakout candle.
Oh, gotcha.
Yeah.
So we've got our entry orders, we've got our stop loss orders. Now for the fun part.
All right.
Taking profits.
Oh, let's talk about profits.
When do we know it's time to exit a winning trade?
This is where it can get a little tricky.
Okay.
Because, it's easy to get caught up in the excitement of a winning trade.
Right.
And want to squeeze every last pip out of it.
Right, yeah.
But remember, we're not trying to get rich on any single trade.
Right, yeah.
We're playing the long game here.
Okay.
We're focusing on consistency.
Okay.
And extracting profits from the market over time.
So how do we find that balance?
Right.
Between letting our profits run and not getting greedy?
In the Hunter method, we use a simple rule.
Okay.
We aim for a risk-reward ratio of at least 1 to 2 on every trade.
A risk-reward ratio of 1 to 2.
Yep.
Break that down for me. What does that actually mean?
Sure. So it means that for every pip we're risking on a trade, which is the distance between our entry point and our stop loss, we're aiming to make at least 2 pips in profit.
Okay.
So if our stop loss is 10 pips away from our entry, we're looking for a profit target of at least 20 pips.
So we're making sure that our potential reward is twice as big as our potential risk.
Exactly. At least twice as big.
Okay, I like that.
Yeah.
And how do we actually set our profit target?
We use another order type called a limit order.
Right.
A limit order basically tells your broker to automatically close your trade when the price reaches a specific profit level that you set.
So if we're in a buy trade, we set a limit order above our entry price.
That's right.
If we're in a sell trade, we set it below.
Correct.
And remembering that 1 to 2 risk-reward ratio, our limit order should be at least twice as far away from our entry.
At least twice as far, that's right.
As our stop loss.
Yeah.
This is all coming together.
Yeah.
So buy stop and sell stop orders to enter on those breakouts. Stop loss orders to manage our risk.
Yep.
Limit orders to lock in those profits.
Exactly.
We're like a well-oiled trading machine.
I like the way you think.
But even the best machine needs, like, regular maintenance.
That's right.
Right.
Yeah.
So is there anything else we can do?
So here's a bonus tip.
Okay.
Once your trade moves into profit, you can actually consider moving your stop loss order to your entry point. Or even slightly above it for buy trades. And slightly below it for sell trades.
So we're essentially guaranteeing ourselves a profit at that point.
Exactly.
Okay.
So it's called a trailing stop loss.
Trailing stop loss.
And it's a really powerful technique for protecting your gains and minimizing your risk as the trade develops.
Wow, this has been an incredible deep dive into the Hunter method.
It has.
We've covered so much.
We've covered a lot of ground.
I feel like I've learned a whole new language.
You're speaking fluent Hunter now.
Well, hopefully I can put it all into practice.
There you go. That's what it's all about.
Yeah. So just remember, everyone, trading is a journey.
It is. It's a marathon, not a sprint.
That's right.
You got to keep learning. You got to keep practicing. And most importantly, keep that hunter mindset.
Right. Be patient, disciplined.
Patient, disciplined, always ready to strike when the opportunity presents itself.
Absolutely. Well, this has been fun.
Yeah, this was great.
Big thanks to you for joining us on this deep dive into the hunter method.
My pleasure.
And to all of our listeners out there, thank you so much for tuning in, and we'll catch you next time.
See you next time.